The month of October has come to an end, and this month was pretty great for my portfolio towards the end of October. I received 5 different dividend payouts this month, so let's go see what they were, what stocks I purchased, and what I received in November. Let's jump in. And if you're sharing my investing journey with the hopes of inspiring you to start growing your wealth. I'm over here in M1 Finance. This is the broker that I use for my dividend portfolio. If you are interested in opening an account with them, I have a referral link down in the description. The total of my portfolio is $8,639.58. My overall gain is a negative $177.92. And my overall return is a negative 4.5%. Going back to this last month, overall gain is $559.08, and overall return was 7.15%. So towards the end of October, it was really good for my portfolio. My top 3 holdings were Lockheed Martin with a return of almost 34%, Avi with a return of 27.26%, and Caterpillar with a return of 24.32%. My bottom 3 stocks were Intel with a negative pretty much 35%, Verizon with a negative 32.19%, and Best Buy with a negative return of 21.59%. The first dividend payout I received was on October 11th from Best Buy, ticker symbol BBY. And for the 10.43 shares of Best Buy that I own, I received $9.17. From the beginning of the year, Best Buy has fallen 33.07%, and this last month it has grown 2.37%, bringing us to a total of $68.35. Right now, Best Buy is still trading very close to its 52-week low, which was $60.79. Over the past few months, I've been slowly buying shares of Best Buy here and there as the price has been close to its 52-week low, just to bring down my average share price and continue to dollar cost average. Looking over here, we have a PE value of 11.09 and a current dividend yield of 5.15%. So that'll give you an annual payout of $3.52. Over in TradingView, showing you a daily chart of Best Buy. Trend in the last week or so has been in a positive trend. So we are moving up. We have crossed this 25-day moving average and coming up here close to its 50-day moving average. So as this positive trend continues moving upwards and there's enough volume, because volume is going to give us that momentum to break through these moving averages, we could possibly break through this 50-day moving average and hit our 100-day moving average. And looking right back here, you can see kind of a resistance point around this $70. And right over here, we had a support of that $70. So very well, if we have enough volume these next few weeks, we could have enough momentum to continue this positive trend and break through those moving averages and continue making all-time highs. On October 13th, I got a dividend payout from Medical Property Trust, ticker symbol MPW. And for the 2.07 shares I own of Medical Property Trust, I received 60 cents. So from the beginning of the year, Medical Property Trust has fallen 50.58%. And this last month, Medical Property Trust has fallen 3%, bringing them to a current share value of $11.59. They are very close to their 52-week low, which was $9.90. Now, Medical Property Trust is a REIT, so instead of a PE value, we have a price to funds from operation, and the price for funds from operation is 6.4. Current dividend yield is 10.01%, and I'll give you an annual payout of $1.16. As I mentioned, Medical Property Trust is a REIT, and they acquire and develop different hospital facilities, and they're one of the world's largest owners of hospitals, and currently they have 431 different facilities. And I started investing in them a couple months ago, so slowly buying up shares as the price is staying close to its 52-week low. Over here looking at charts, we do have Medical Property Trust starting to go into a positive trend, so we've been in this negative trend for a while now, as you can see here. Once we fell through our moving averages, it's just been a downward trend. So right now, it's pretty much been a support level around this $10, and they're starting to move back up. Just broke through its 25-day moving average. And if this positive trend continues and we have enough volume, as you see here, we've had a lot of buying volume as well as selling volume right here. So if the buying value continues, and we just passed earnings as well, will be able to continue moving upwards into our 50-day moving average. So looking good for medical property trusts in this positive trend. On October 14th, they received a dividend payout from Realty Income Corporation, ticker symbol O. For the 1.94 shares that I own of Realty Income, I received 48 cents. Since the beginning of the year, Realty Income has fallen 12.49%, and within this last month, it has grown 4.39%, bringing them to a current value of $62.31. They're right below their midpoint with a low of $55.50 and a high of $56.06. Realty Income is a REIT, so they have a price to funds from operation of 15.5, and they have a dividend yield of 4.78%, which will give you $2.98 annually. Realty Income owns over 6,500 real estate properties through long-term lease agreements, and that's basically where to create the cash flow for their investors. For Realty Income, it has been looking very good for the last couple weeks. We did have basically support level around this $55, $57 range, and we started moving in a positive trend. So we have broken through our 25-day moving average and looking very close to our 50-day moving average. One thing to notice that where it is sitting at right now has been a support level in the past few months of that $60, $65 range. So if we continue getting a great buying volume as we have seen the last few weeks as we move into our earnings, very well could look very good for Realty Income and kind of keeping around this $60 range and possibly moving higher to our 100-day moving average. On October 17th, I received a dividend payout from Stag Industrial, ticker symbol STAG. And for 13.5 shares of Stag that I own, I received $1.65. For the start of the year, Stag has fallen 32.62%, similar to that of Realty Income. And within this last month, it has grown 11.51%. So looking very good for Stag. That will bring them to a current share price of $31.67. So they are moving away from their 52-week low, which was $26.56, and a high of $48. They have a price to funds from operation of 14.43 with a dividend yield of 4.61%. That will give you an annual payout of $1.46. Just like the other ones we have looked at so far, Stag has also had a positive trend right now the last few weeks, so it has been able to break through a 25-day, 50-day, and 100-day moving average, as we can see right here. So right now it is just broken through one of the support levels, which was around this $30 range. And so very well, if this buying value continues moving forward, could continue to move the stock upwards or at least stay on its support level of around that $30 range. So very nice for Stag here. In the last week of October, I received a dividend payout from Cisco, ticker symbol CSCO. And for the 1.12 shares that I own of Cisco, I received 43 cents. For the start of the year, Cisco has fallen 27.74%. And when in this last month, it has grown 11.92%, bringing them to a current share value of $45.64. So they are moving away from their 52-week low like Stag was, which was $38.63. with a high of $64. Right now they're trading at a PE value of 12.95, and they have a dividend yield of 3.33%, which will give you an annual payout $1.52. Cisco has had a really nice last few weeks and has continued in this positive trend, and right now is in this overbought area, which is above the light blue graph you see here. So in that overbought area, we can continue getting all-time highs, and as you see here, we broke through our 25-day, 50-day, and 100-day moving average. So we could very well continue moving up to our 200-day moving average. However, looking back history-wise, you can see around that $60 range was basically a turning point. As you can see right here, it stayed in this overbought area, kind of moving sideways, and then started to turn over once the trend started turning negative after earnings right here. So do keep that in line. Very well could stay around this $60, $65 range. But overall, very good for Cisco. Now at the beginning of the video, I just say I received 5 dividend payouts, and I am expecting a 6th one from JP Morgan, ticker symbol JPM, on the 31st, which is tomorrow from the day of recording. And for the 4.8 shares of JP Morgan that I own, I'm expected to receive $4.80. So over here in Seeking Alpha, you can see from the start of the year, JP Morgan has fallen 22%, and over the last month, it has grown 17.31%, which is pretty great for JP Morgan. So it is very close to its midpoint, with a low of $101.34 with the high of $172. JP Morgan is currently trading at a PE of 10.17 and it has a dividend yield of 3.17%, which will give you an annual payout of $4. As we saw in Seeking Alpha, JP Morgan has done really well this last month and has continued that positive trend as we see down here and is now in this overbought area. So it has been able to break through a 25-day, 50-day, and 100-day moving average and moving pretty much right at its 200-day moving average. But also looking back here around that $125 range, it did hit a resistance point and kind of had that resistance point area a little bit here as it had a 25-day moving average. And it didn't make it up to that 130 before turning back over. So very well could stay around that $125 and $130 range. However, looking at this trend once again in the overbought, we could continue to make that all-time highs and just keep an eye on it for when that trend starts to move over. But overall, looking very good for JP Morgan. Tallying up all the dividends I received this month, I got a grand total of $17.13. Over here, I did put together a spreadsheet calculating all the dividends I received month over month. And I did start last year in the middle of the year. And you can just see here, investing dividends can continue growing that snowball effect month over month. And it's been pretty good for me, especially 2 more months of this year and already have a lot more dividends than I did last year. So very happy with that and continue growing the portfolio moving forward. Speaking of growing the portfolio, sharing what stocks I did purchase this month, my main focus was on 2 stocks in the semiconductor sector as those prices fell well below what I felt like was a fair value. So the first one was from Broadcom, ticker symbol AVGO. And throughout the month, I put in $400 and received 0.89 shares of Broadcom. The second one was from Qualcomm, ticker symbol QCOM. And I put in about $200 and received 1.73 shares of Qualcomm. Now, there was 2 other stocks that I did put a little bit in. The first was from Target, ticker symbol TGT. And I put in $50 and received 0.32 shares of Target. And the second one was from Medical Properties Trust, ticker symbol MPW. And I put in $10 and picked up pretty much 1 share. That brings me to a total of $660 I spent on stocks this last month. Over in Dividend Tracker, we're going to look at what I'm expected to receive in the month of November. They do have a free and a paid version, so if you're interested in looking at Dividend Tracker and the other features they have, I will refer a link down in the description. First company I'm expecting a dividend from is from AbbVie, ticker symbol ABBV, and for the 1 share that I own of AbbVie, I'm expected to receive $1.44. For Caterpillar, ticker symbol CAT, I have just over 1 share of Caterpillar and expected to receive $1.49. Scrolling down here. Next up is Lowe's, ticker symbol LOW, and I have just over 4 shares of Lowe's, so I'm expected to receive $4.23. And right down here, one of my monthly dividend payers, Realty Income, ticker symbol O. I have almost 2 shares of Realty Income, so I'm still expected to receive 48 cents. Scrolling down once again, looking at Starbucks, ticker symbol SBUX. I have almost 9 shares of Starbucks, so I'm expected to receive $4.70. My second monthly dividend payer, Stag, ticker symbol STAG. I have 13.5 shares of Stag, so expected to receive once again $1.65. And the last 2, AT&T, ticker symbol T. I have just over 4 shares of AT&T, expected to receive $1.16. And for Verizon, I have just over 2 shares of Verizon, expected to receive $1.41. So that'll bring me to a total of $16.63. So looking very good for the month of November. What my plans are for November, I'm looking at buying a share or 2 of Best Buy as my average share price is around that $87 range. So I want to continue bringing my average costs down. Also want to continue to keep an eye on the 2 communication stocks that I own, AT&T and Verizon. And right now AT&T has been doing very well the last few weeks after its earnings. While on the flip side, Verizon has continued to fall. So I'm going to keep an eye on those. And depending on what the next few weeks are, considering buying some of their stock. Now I do want to keep an eye on Lowe's and Target, but I want to purchase them more of a fair value. So I'll keep an eye on them. Right now for Microsoft, right after earnings, the stock fell a lot. Don't really have Microsoft in this portfolio, but I am in Webull kind of working with swing trading. So I'm going to look at swing trading for Microsoft and also Apple. If you enjoyed this portfolio update, let me know by smashing the like button and drop a comment down below what your dividend payouts were this last month. To get more of a deep dive into 2 semiconductor stocks that I purchased out this month, you can find it right over here, and I'll catch you in the video. Have a blessed day. Peace.